Hello and welcome everybody to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we will be reviewing oil prices for the week ahead. So first of all, what do you need to know for crude oil for this week? Well, we have seen hedge funds and money managers, they have essentially reduced their overall net long positions again on crude oil in the latest week. However, we've had quite a few developments over the last few days which have really helped to springboard oil prices higher. So first of all, towards the end of last week, we had new narratives coming out of the financial markets with respect to OPEC and Saudi Arabia and Russia also, who were in discussions to potentially extend the output cut. And with that, on Friday, we immediately saw both WTI crude oil and Brent crude oil catch a bid, moving over 3% to the upside. In fact, we were in and out of Brent crude oil just twice on Friday, banking initially 70 points on our long position, then re-entering again, banking 110 points profit just after non-farm payrolls. And we've again established another position this week on oil. So at the moment, we are seeing a lot of support right now coming in for Brent crude oil around that 60 to 62 US dollar per barrel handle, and for WTI crude oil around that 50 to about 53 US dollar per barrel handle as well. Now, we do have some key data points to be aware of over the course of this week, but also just be aware of the narratives coming out also with respect to the trade war too. So we are seeing overall optimism regarding at the weekend, the potential deal which is on the table at the moment between Mexico and the USA, and to a certain point that has been worked out. There's a few more points to be decided on, but overall that sentiment did cause oil to gap up on the open on Monday, and also on Friday we saw oil catch a bid later on into the close as well. So we're definitely holding those key levels around 50 and 60 US dollars per barrel on Brent and WTI crude oil. We have API data which is due out later on Tuesday, which will be out at 9:30 London time, and then we also have crude oil inventory data which is going to be on Wednesday at 3:30 p.m. Those data points have been really important recently. Normally, as of late, we've continued to see a build in US oil inventories. Last week again, we saw the biggest build in inventories since 2017. Oil immediately sold off of the back of the inventories, but caught a bid at those major levels of support. So with WTI crude oil, it's around $50 per barrel, and Brent, it's around $60 per barrel. So if you see the price action this week dip back to those levels, look for evidence of support coming in on lower timeframes. If you do see oil catch a bid at those levels, that's where I would look out for the potential to see a bounce higher here as we continue throughout the month of June and we get closer to a resolution regarding the OPEC meeting. So right now, the proposal with regard to OPEC is for an extension cut. So they're going to look to extend that at the meeting, which they've got at the end of June, or actually it's been proposed now that rescheduling of that meeting to July. Once we have a resolution on that, and often the narratives, in fact, even in the build up to the OPEC meeting, tend to see oil does get supported. So with that, we've got this balance right now, as I mentioned last week, where you have oversupply, which is coming out of the oil inventory data, which we're seeing every week at the moment off that Wednesday's oil inventories data, and that's tending to cause oil to sell off. We do see that happen again. You could look for support to come back into oil and trade that range week to week. At the moment, oil, both Brent and WTI, is moving within about 300 to 350 point range. But then more narratives coming out and the rhetoric's coming out from OPEC, if they are going to be much more decisive with respect to further cutting outputs as we get towards the end of this month in June. So if they're going to extend the output cut until the end of the year, that should see oil certainly get a bit of additional support. From a seasonal point of view as well, normally June, especially as we get towards the end of the month and then we move in to July as well, we've got a lot more of the general public just going on vacation, a lot more summer driving that occurs, a lot more fuel consumption, and normally that does provide a little bit of additional demand as well as we get towards the end of the month and as we move into the summer too. So you can see that also have a bit of optimism in the overall oil market, providing more demand too. So I would keep an eye again on those really three key points over the course of this week. So you want to look at crude oil inventory data. So you've got API data coming out on Tuesday, and then on Wednesday you also have crude oil inventory data as well. So those data points can provide some really great moves. Oil can be a really fast mover off the back of those news items, easily 100 to 150 point moves, especially on the Wednesdays oil inventories data. You need to watch that carefully. Keep an eye on the narratives which are coming out from OPEC at the moment, from Saudi Arabia, from Russia, with respect to output cuts. We want to get more of a clear date as to when the meeting is going to be, which now is proposed for the beginning of July, but overall it's providing some bullish sentiment. You definitely want to keep an eye out for that, and also watch out for the hedge funds and money managers, which over the last week they have trimmed their overall net longs. However, that data is relevant up until last Tuesday's close, and oil really started to catch a bid at the end of last week. On Thursday and Friday is where we saw oil break out to the upside 3%, and keep an eye too on the trade war narratives right now. We've obviously seen overall optimism in the market, as well as a result of the Mexico and USA coming to some sort of an agreement at the weekend, which has provided optimism for oil. So keep an eye on those data points. Lastly, keep an eye on the oil rig count as well. That comes out every Friday after 6 o'clock London time. We saw a significant reduction in oil rigs at the end of last week, and towards the close that propelled oil higher, in fact giving us a great opportunity to bank some profits ahead of the weekend. So hopefully you're capitalizing on the recent volatility here with oil. It's a very lucrative market to trade. It's the most heavily traded commodity in the world, and you really want to use your research driven trading as you trade this market. It's very important to be aware of all the data points that I've just mentioned, have real access to real-time news feeds, especially when you are trading crude oil. It will help you a lot, and we'll be back here next week talking you through more updates, especially as we get closer to the OPEC meeting as we transition from June to July. So with that, I wish you good trading, and we'll see you here back on the next session.